Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, October 8th, 2018. It's 10 after 1 Eastern Time. I wanted to do a video for members of the site. I may just post this one in the trading room, as I wear multiple hats, swing trader, trend trader, investor, as well as active trader, and been, in and out of QQQ several times today. And I want to show you what I'm thinking on the markets right now. Couple things to note. Well, first, let's just go over the resist or support levels that we're at. So we're down again, another nice down day, three big red candles in a row. This is a daily chart of QQQ. There's that minor uptrend line broken. This 178 support is, we're trading below it now, but not by a whole lot. Today has not really been very impulsive selling. We've had a few bursts of it, but for the most part, we just keep moving down. We gap down, had a little ramp up, faded that. But remember, on a daily time frame, if you're looking at support levels on the daily chart, all that matters are daily closes. So, we're below support now, and they could certainly build on that. And I still think we get down to the swing target sooner than later here. But let me just add that other divergent high right here as I'm doing this video. But so we had almost equal highs there on QQQ finally right before that high. But where I was going with this is, what happens? They can certainly intraday ramp and close this or get it back above that 178-ish level. And again, you can see when you look to the left of the chart why that is one of many levels. And that's what I'm going to do here is show you some of the different levels there. But it's acted as support and resistance on QQQ in the past, so it's something worth noting. And again, if we take that out, I don't see a whole lot. There are some reaction lows here, but I think we come down to this longer term trend line I have right here. And then you can see below that is the next target down there, 169.60. And just to be clear, active trading, day trading stuff is completely separate from swing trading. Right now, I have nothing but sell signals across the board, and may even add QQQ. As a short trade, I'd like to get an objective entry, but we may not get a much of a bounce. I think we're in that WTF moment where, dip buyers realize the dips aren't being bought. But again, we haven't taken out this support level yet, and I want to show you a few more that are giving me pause right now and opening up the possibility of at least an intraday bounce. So there's QQQ. And, while we're on the Qs, before I even get to SPY, remember it's all about tech. And this is XLK, and tech broke. This was that wedge, rising wedge, that broke down. That was the trend line I wanted to see, and boom, three impulsive candles. So that confirms that the trend line wasn't just an arbitrary thing placed. It was a well-watched support level. I harped on this one for a very long time, and the fact that we're not just moving through here with a series of small green and red candles, you get that impulsive selling, and that is because that was a key technical level. And once it gave way, the selling was impulsive in XLK, and you've seen the broad markets move down because, as I said, tech is the largest component of both the QQQ and S&P 500. So there it is. Now we are coming up to that longer term, more significant primary uptrend line. We're not far from it now. We may punch down a little more intraday. Doesn't mean we can't crack below it, but we haven't hit it in a while. So, in fact, we haven't hit that trend line since all the way back here. When was that? That was back in late April. And this will be the first tag of that trend line. So, we're probably good chance, I should say, we'll get a reaction there. You can look at a chart this way. That's, again, that same trend. Well, here's another trend line. That one I showed you a second ago, goes all the way back. Well, let me tell you how far it goes back because I'm curious myself. Just to make sure that one goes back to, yeah, the early 2015 lows. There was a little spike, a little mini crash there, mid 2015, but you can see that's the primary uptrend line off the 2016 lows on XLK we were just looking at. All right, so back to that other board, and here's another trend line. You can see it comes off the early February lows. A lot of reactions, well, quite a few, I should say, and we're on that trend line now. So there's support, and again, depending on which way you look at it, with another trend line not far below. We look at SPY. There's that same or comparable trend line off the early April lows, and we're pretty much at or just above it now, so minimal downside. And again, we may find support there. This trend indicator, at least the PPO signal line, is bullish. It's still above the zero line, although all the trend indicators are pointing down. So just because you have a bullish trend indicator doesn't mean you have to stay bullish, but as of now, the momentum is down, but we are coming up on support, and below that, 279.67. Okay, flipping over to the futures, these are the S&P 500 E-mini futures, and again, we're at support there. You can see that pretty decent support level. You can look at reactions from below, reactions here, reactions here. We broke trend and the trend line there, and that we've moved down since. And again, it seems like so far today, as I zoom in closely, this is a 60-minute chart. Three candles so far, one, two, three, holding above that support level. Potential divergences building, but they're potential. So far, its market just can't get about. It tries, it finds these support levels. It's tried several times to rally, but it seems as of now we're not going a whole lot lower because there's quite a bit of support levels, and hey, maybe they give way, but as of now we could certainly bounce off those levels. I'm looking at certain risk on asset or risk off assets like treasuries not rallying today. I mentioned that earlier. Gold, both treasuries and gold down. Institutions will normally flock to those instruments if they thought there were more downside. Doesn't mean they're right. Sometimes and quite often the institutions get it wrong. If that's taken out, I just gave you another level there, 28.45. With this one we're flirting at now around 28.66.50 or so. So there's support on that 60-minute chart of the S&P 500 futures, and as I've showed you earlier today in the video, we're right about at this BOD trend line, just a little above it. We're actually a little below it now, the benefit of the doubt trend line, but we're also at this line here, which again I just showed you. So there's horizontal support on SPY, and certainly the potential if it snaps back end of day to print a candle back above that BOD trend line, that lower of the two. Let's see, and then a couple other things I wanted to show you because it is, in my opinion, all about tech. Let's go to QQQ and look at the tech stocks, the key stocks. Let's just go through here and we'll wrap this up. Apple. Here's a trend line again, excluding that one little whipsaw signal breakdown right there before earnings and a gap back above on the following the earnings. We're right on that trend line. You're so close you can't even see. There's a little doji. You have to zoom in. You can't see the body because it's compressed right on that trend line. Friday's lows bounced off the trend line. So there's Apple on key trend line support. Negative divergence now. It's confirmed with a bearish cross. That's quick. Usually you get a crossover, you get a little upside. So my point is it could play out. If we start to slide today, smash through all these supports, that's not good for the market. But as of now, this market may have one last gasp here before Apple and some others and those the SPY goes on to break that trend line. And if so, then we're looking at maybe a little more downside. But that's one scenario, just a near-term bounce. Swing traders, if you're short or shorting Apple, if you're not short, you want to wait for a solid break of that trend line. You want to wait for the SPY to break support. All these support levels I'm talking about will give you a higher probability entry, especially with daily closes. If not, we may get one more bounce off here. You may get an objective short higher up in the pattern or on a breakdown of this trend line, a solid break of the trend line. But like I said, if you're already short, this seems to me, appears like it will play out soon. Of course, as I always say, anything's possible. We'll just monitor the charts. If these divergences, Apple wants to make another thrust higher, come up here like this and extend these negative divergences, well, it'll still be, again, a divergent high. That's why I think the upside is limited, and we're really pushing the lower limits of a lot of these support levels now. Let's just look at a few more and we'll wrap it up here. Amazon, in my opinion, has already given up the ghost. I pointed that out. We already broke trend line, back tested and rolled over. Took out today this 1875 support. 1875.50 has support coming up on 1777-ish. Could probably lower that line a little, to be honest with you. I think it's better there about 1766. But, just stepping back, you don't try to gain bounces on this one. This is a breakdown and back test. If you're short Amazon or XLY, because Amazon is most of XLY, I think that stock is coming in some more from here. But there's Microsoft at support right now. You can see that minor. It's a little price channel here. If that support level breaks, we come down here. And again, I think we will get there soon. It's just a matter of, to me right now, do we bounce a little bit before then or not? Here's Alphabet, Class A. I have a support zone here. I've had it on for a while. We're at the top of that support zone now. Doesn't mean we must bounce, but we're at support. There's the other share class, and just really a different draw. These charts are going to look similar, but there's a minor uptrend line here on the daily we're at now. And let's look at Facebook. Facebook, again, failure to launch so far with the positive divergence. I talked about that on Facebook, and Intel broke out recently, but then failed, or has been coming back in recently. So there's Facebook, continues to move lower. Um, it just can't rally. And there was Intel, had a beautiful bullish falling wedge. I talked about this for a while, referring to it as a failure to launch. Broke out once. That breakout was lackluster and failed. We back tested, then had an impulsive move, sucked in, a lot. I'm sure, like a lot of, you know, eyes saw that breakout right there. I'm sorry, not the breakout in successful backtest, then the rally, impulsive. There was one little day of profit taken, then it followed through. But now most of that has been faded. And if we fade that breakout, that's just not good. So again, I'm looking at a stock market leading or index sector leading stock, Intel, as far as semis go. And I see a breakout that's been pretty much faded so far, lackluster. And I'm also noting, you guys know I like to use this PPO signal line, the 9 EMA, the latitude across, as a trend indicator. When that line is above the zero line, like across there, stayed above, back tested the zero 3 times, kept saying the trend's bullish, stay long, stay long, stay long, boom, crossed down below the zero line. And as long as it remains below there, at least by this one trend indicator, it says the trend is bearish by this metric. Doesn't mean that it can't cross back over. Doesn't mean price won't go up first before this crosses, because it will. But right now, PPO is coming back down, and the PPO line starting to roll over at the zero line. So the white line, the signal line, is still well below, and that's saying this is a bearish trend. And this is what happens. I've talked about this. If this is the beginning of a correction, counter trend trades and bullish breakouts have a much higher success rate in a bullish trend, or I should say, yeah, bullish breakouts and long side trades, whereas in a bearish trend, the opposite works. Bullish breakouts have a higher failure rate, bullish chart patterns, just like the bearish chart patterns do during an uptrend. I know it's been frustrating. Personally, I've had a lot of shorts in the last year or so, seeing some clean breakdowns, bearish patterns that either didn't play out or played out. And don't get me wrong, we've had a lot of successful ones as well in the shorts, but overall it's been a lower success rate on the short trade ideas than it would be if the primary trend was down. So point being, the semis have peaked earlier in the year. I've said that many times. They continue to move lower. So whatever the broad market's doing really doesn't matter. This is a sector in a downtrend right now. Not Can't put the nail in the coffin yet. There's some levels I already talked about on SOXX. I don't want to get off on a tangent here, but that's what I'm seeing. And I look at things like this, these failures to launch on Facebook, Intel, these clean bullish patterns. If we're still in a bull market with a lot of room to go, why are these former leading stocks not following through to these bullish breakouts? Showing me distribution, which is typical at the top, just fewer and fewer stocks carrying the market up. But again, those are the ones I wanted to cover. A few more. Cisco just rolled over after this divergent high. Looks to have more downside here, but then there's some others. NVIDIA is still above this trend line here. Comcast is actually, was bullish here, the bullish falling wedge. I highlighted that breakout back test. It had a nice rally, went up to that 37-ish target slash resistance, a little bit above there, but you can see a very clean uptrend line, rising wedge pattern, negative divergence on that wedge pattern. Confirming the bearish nature. Indicators are making roughly equal highs, while prices were making higher highs. That is negative divergence. And boom. But this one's come back to support. I wanted to point that out. This level here, I don't know. Sometimes, I might see things and, that aren't clear to others. But this whole area, these three lines together, represent a support zone. So this one has pulled back and could bounce here soon. If it doesn't, if it takes out the bottom of that support zone, 3280. But I think that's it. I could go through this and again probably point out a couple other levels, SPY, NQ, uh, and some key stocks that are at support now. But I guess the final takeaway is, the longer term charts, that those bearish divergences and trend lines, everything I've pointed out for months now are starting to finally come together. We're starting to see, the sell signals that I've been calling for. I always say this, the divergences are not sell signals. They're an indication of a trend line break or trend reversal, I should say, is likely. Bearish engulfing candle last week in QQQ. That is finalized. That's in the books. And more importantly, is the trend line break. Here's that trend line off the early April lows. Solid impulsive break below. We're down below that candle now. So, despite any near-term bounce, and that's all I'm talking about here, which might present an additional shorting op, it's one reason I'm doing this video. I think we come down here. And remember, once you reach that what I call point of recognition, WTF moment, where though most market participants, which are always bullish, the vast majority of market participants, I'm talking, all the general public, institutions by nature, they tend to lean towards the bullish side no matter what. And so that point of recognition is a point I call where a pullback is deep enough and impulsive enough and enough trend lines and moving averages and everything else that the majority of traders watch have now been broken. And once you get that point of recognition, then that's where they say, oh, okay, this isn't just your run-of-the-mill dip buying op like this and this and this. This is more along the lines of what we had back in maybe, again, I'm trying to get in their heads, of what we had back here about at this point and what we had here about this point, where there's more downside to come. So if that's the case, then bounces are going to be, and I still think they will be minor if we get one. But again, that I'm doing that because you may have an opportunity to reshort on a bounce there. But a swing trader, I don't see any reason. If you're short, you have some swing short positions, and you're not an active trader, don't worry about those micro bounces. Just wait for those support levels to go. Maybe if you plan to add to your positions, that's when you want to add. And that's why I pointed out that we are at support on a lot of the markets. So because we may get a little intraday bounce here, maybe a 1-2 day bounce, maybe more than that, possibly. But I look at these big weekly divergences now confirmed, and I say, no, the odds are we come down and ultimately going to break this much more significant trend line. And so instead of looking at, another couple percent downside, we could be looking at, double digits, 10% or more. And I still maintain I think that'll most likely happen in the fourth quarter, which we're already in now. Whether it happens this week, next month, December, hard to say. Whether it happens at all, nobody can say with confidence, but I can say with a high degree. I should say nobody can say with certainty, but I can say with confidence, a fairly high degree of confidence, I think we will get a much deeper correction by the end of the year. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.